When should I lock in my interest rate? One of the top conversations right now in real estate centers around home loan interest rates. Let's just face it. Are they going up? Are they going down? How high will they get? Ultimately leading to the question, when should I lock in my interest rate? Interest rates change daily and sometimes many times throughout the day and have been extremely volatile over the last few months. There's a lot of reasons for that. The fact is, rates have increased since the beginning of the year. A rate lock simply protects you from an interest rate increase during the home buying process. In home lending, there are two approaches to a rate lock. Either one, a lock and shop program, or two, once you're under contract and the property and closing date have been identified, you can lock at that point. All right, so let's start with a traditional rate lock scenario. Essentially, once you've identified that property, your offer has been accepted, a close of escrow date has been established, and your lender has received your loan, application, and purchase contract, you're in a position to lock in that interest rate. Now, most closings take place within a 30 to 60 day time frame, so your lock would be in relation to your actual closing date. The rate lock covers you during this time and ensures that you know your final rate, your monthly payment, and your funds due at closing. Know that you have an advantage when working with a mortgage advisor who is well-versed and studies the MBS market. Mortgage-backed securities drive long-term home loan rates and are traded daily. An advisor that monitors rates throughout the day, as well as upcoming news, the Fed meetings, the release of financial reports that can impact mortgage-backed securities, is absolutely vital. And all of this can impact your mortgage rate and your rate lock. In most cases, once your rate is locked in, you won't be able to lower the rate if rates go down without an associated cost. On the converse, you are protected if rates increase prior to your closing date. In this type of rate market, we've seen rates go up much faster than they come down. Some lenders offer a unique program that allows you to lock in the interest rate prior to finding a home. They are called a lock and shop program and can be helpful in a rising interest rate market. These programs generally allow you to lock in a rate for up to 120 days and gives you an option to float down to a lower interest rate once you're under contract, if in fact rates are lower. If rates are higher, then the rate you locked in at up front means you're protected and your rate will not increase once you're under contract and ready to close. These programs generally have a cost associated with them due to the flexibility in the extended lock offering, but are good options to consider. The benefit with a lock and shop program is that you have the comfort of knowing the interest rate and the monthly payment, as well as you can take the time to find the right home with you and your family without the pressure of rising rates. There's a pros and cons to each option, and working with an experienced loan advisor who can walk you through all of the rate options available to you and educate you on each option is so important. Now you have a general idea about when you should lock in your interest rate. Home loan education is my passion, and I hope you found value in today's video. Please like, share, and drop me a comment below. And oh, don't forget to subscribe. Until next time.